So just to make sure that you guys can hear me loud and clear, can you type in GA for good afternoon? Alright, good to see everyone. Yes, I can see all the comments slowly coming in. I think it is right after lunch, right? So the response is also a little bit slower as well. Okay, but no worries, no worries. I think this morning, right, I think there are a lot of things that Glenn has actually gone through, including valuation, including when to sell, when to review the price, as well as what do you actually need to do when it comes to, having different portfolio, whether you're an active investor, passive investor, or some of you are somewhere in between, okay, semi-active investor. Okay, but very importantly, I want you to actually tell me, right, okay, what is the one thing that you feel that it is still a little bit missing, okay, to actually help you to become a better investor? What is the one thing that is in your mind? It's like, well, actually, I'm still not very sure about that one thing. Is there anything I want you all to also put inside the chat? What do you think is the biggest obstacles, okay, for you to actually get started? Come on, everyone, let's type inside the chat. Okay, what is the one obstacles? Okay, stock selection, fantastic. Where to look for stock? Okay, what else? What else? Slow learning curve. Okay, so again, okay, maybe I just want to address King E question. Okay, so I think very importantly, when you tell yourself that you are a slow learning curve, right? What is going to happen is that actually what you are telling yourself that you are slow. Okay, so what happened is that I try to actually, even when I'm learning certain things, right, even though I know that I might not be the fastest learner, but I always try to tell myself that, okay, I think I'm actually doing pretty well. So instead of telling yourself that you're a slow learner, sometimes what happens is that there is this reinforcement. So you say, yeah, actually I know I'm slow, so I'll just slowly learn. Okay, but more importantly, I think you can be slow, but you have to understand that in the stock market, opportunity don't wait for you. And I think that's also one of the reasons why I think earlier on, Glenn actually given you guys a very, very crazy offer. In fact, yesterday I was just talking to him. We were having a lot of discussion whether in terms of, do we even want to let you all know about this option class, and what is the price? So one thing that Glenn mentioned that I have nothing to say, he said that, hey, I will pay for that. Okay, so for that, I really, really want to applaud Glenn, okay, because he really feel, I think, personally for him, he has seen a lot of people because of the lack of knowledge, they actually suffer a lot, and that is why he really have the heart to help all of you. So can everybody also help me to type in thank you Glenn in the chat? Okay, great. Let me look at some of the other obstacles as well. Not familiar with the Think or Swim app? Okay, don't worry, later on we will also have time to also cover that again. Okay, so of course for those of you who are still not exactly very sure, later on we will actually do a wrap up. Okay, where to look for stocks, undervalued stocks. Okay, fear of getting started. So many stocks are undervalued, are not super undervalued. How to invest safely. Okay, let me see what else. Can talk about DLC. What is DLC? Actually, to be honest, I do not know what is that. Okay, yeah, DLC. Maybe you can ask Google or ask ChatGPT. Alright, anyway, let's continue. So this afternoon, okay, what are we exactly going to learn, right? Okay, one of the thing is already addressed by what you guys are asking for, which is where can we actually start looking for stock? I think very importantly, we look at the number of stock that are in the US stock market. There are 6,000 over stock. Right, and again, why we choose the US stock market is because there are so many companies. Even if we just narrow down to the top 1% out of the 6,000 company, that is 60 company for you to look at, which in my opinion, looking at 60 company, it is still a lot. In fact, if you ask me, a preferred watch list, that means let's say today I want to go shopping, right? I need to have a list of company that I personally understand and I love it, and I know that these are company that has already passed the stock. I would say that a range of somewhere around 15 to 20 stocks, right, would be a very, very good amount. But having said that, it doesn't mean that all 15 to 20 you are going to put money inside, because why? This might be a good company, but the second thing we want to look at, A, is assess the business. What is B? Can everybody help me to type in what is B? So after you know this is a good company, do we straight away go and buy it? Yes, exactly. B stands for what is the buying price. We want to wait for some of the company to become undervalued before we actually go in. Right. Then of course the last one is how can we learn how to generate cash flow, whether is it through dividend, and of course some of you already learned the BOSS. You can also use BOSS to help you to generate the cash flow as well. How do you filter the better stock? Actually, that's exactly what you guys have already learned, which is the eFriend checklist. So what I'm going to do right now, okay, because I think this is right after lunch, I want to make sure that you guys do a little bit of thinking, but yet at the same time, I do not want to straight away go into too much content, okay, because otherwise, I think half of the content or maybe 70% of the content will not be absorbed into your brain. So what I want to do is I want to actually pick up some of you, right, to actually do a hot seat. That means I want all of you right now, can you type in one company that you personally are interested to invest or you personally already invest. Then what happens is that we will go through this company together. I will tell you whether this is a good company, whether is it a good time to buy or not, and also my personal take on this particular company. So everybody put in a company name that you personally are either interested in or you already invested in it already. Okay, but of course when I call you up later, okay, then you have to be prepared to also on your camera. Okay, to on your camera and also to on your microphone so that we can have a conversation. So let me take a look at the list of company. Those we have already done that I am not going to go through again. Okay, can we have Serene Hong? First company, very interesting. Intel. Can we actually invite Serene Hong to come onto the screen? Serene, are you there? Let me just spotlight you. Serene Hong. Yes, okay, you need to on. Okay, I saw you already. Good. Then you need to unmute yourself also. Well, I realized that Stevenson and Serene chose the same company. Okay, so maybe later we can also find out like what makes you guys actually choose those company. Hi, Serene, are you able to unmute yourself?
Oh, yes.
Yes. Okay, yes, hi, Serene.
Hi.
Yeah, are you able to hear me loud and clear? Can hear me right? Can hear me right?
Yeah,
okay, so maybe Serene, I ask you a question now. Why you choose Intel? Is it because you work there or you're familiar with the product?
I think it's a very good company, very famous, cheap company, and I did work there previously.
Oh, okay. How long ago was that? If you don't mind sharing,
3 years ago, I stopped working in 2015.
Okay, so about 2015, which is about 8 years ago. You were still at Intel. Oh yeah, it's not 3 years ago, it's 8 years ago. Time flies very fast. Okay, but very interesting, yeah, because 8 years ago, right, I also personally think that Intel might be a great company. But I think today, if you're still familiar with the space, you realize that Intel market share is actually being replaced by which company?
AMD.
AMD, right? And also I think NVIDIA is also coming very, very strong. Okay, but of course, very interesting. Let's put aside what we feel about the company because all of us, we might feel differently. Let's look at the numbers itself in terms of all this company. Does it make sense based on our eFriend checklist? So what I'm going to do right now is I'm going to go to Safari. And where should we go? Actually, we go to our Jita. So what I'm going to do is going to type in Intel. And let's take a look together. Let's take a look at this company. Okay, let's take a look at Intel. Okay, so Serene, maybe you can also tell me based on what you see over here, right? Is this a pass or a fail? Maybe we start off with the diluted earnings per share. Okay, from the left to the right. If it's you, based on this, will you give it a pass or a fail?
Based on just this, not so good, but I think overall it's still a good company. Maybe.
Based on this, but overall is okay. Oh, yeah,
so overall, but just on the EPS itself, it's dropped a lot, right?
Okay, dropped a lot. Okay, so of course you can see 2023, it doesn't show the data yet. I show you how to get this data. So because it is not a full year yet, so it doesn't show, but you can click on quarter. You all can see over here, right? There's a quarter. So if you click on quarter, it will show you quarter to quarter. So you can actually see over the last 4 quarters, half of it, right, they are actually losing money. they are losing money. So that is actually a key concern to me. Okay, because end of the day, for a company to continue to do even better, we always say you want the company to make more and more money so that what? So that the share price will go higher and higher. So if you start to see that this company is making less and less money, where do you think the share price is going to? Is it going to go higher and higher or lower and lower? It might go lower and lower. So of course we have to understand, is it maybe a 1 year, 2 year because of COVID, because of certain situation, that's where the business are not doing well? Or if this is a real problem because the competitor actually got a better technology and they are losing market share, to me that is a huge concern. So I will also need to better understand a little bit, but based on, if I'm new, I look at this number, conservatively, I will feel it first. Because I don't know why suddenly dropped so much. Then of course, let's go back to the free cash flow. Same thing, you can see everything is positive, but now they are bleeding, and this is not $9,000. Okay, this is $9 billion. These are all in million. So $9 billion of negative cash flow, it is a lot. It is a lot. Then of course, return on equity, it is also now below our requirement. Interest coverage still considered okay, but can you see the huge drop? If you just look at the trend itself, what happened if this dropped below 4.7? The interest rate now is still relatively high. So what happened is that they might be also under a lot of debt. And if you are not making money and your interest rate is so high, you still have to pay the debt. That's why the cash flow also take a huge dip as well. Of course, profit margin as of now still okay, above 10%. Right, but dividend payout, you can also see most of the amount that they make, 75% they actually pay out to investors. Because why? Most of the time, as a company, they try not to reduce the dividend. You can see that the dividend has been increasing slowly along the years. Imagine today they suddenly say that, hey, business not doing well, I'm going to cut my dividend by 50%, becomes 0.7. How will the investor feel? The investor will be even more worried. They will start to sell off the share even more. So again, most company cutting off the dividend is like their last resort. They try not to cut it. But again, like I said, we look at sustainability. Now at least they still use part of the profit to pay off. But imagine some company, later I'll show you some company, they are already losing money, but yet they are still paying the same dividend. So after they pay out dividend, actually they lose money. Then you realize, does it make sense or not? Imagine today my pay is $3,000. Then I pay my girlfriend $4,000. Wow. So not sustainable, right? So what should I do? Maybe you can tell me what should I do. I make $3,000, my girlfriend I need to sustain for $4,000. The answer is change girlfriend. Okay, in this case, it's change the company. Okay, are you okay now? You're like very serious. Okay, yeah. So this is for Intel. But of course, having said that, let's take a look at the valuation also. Actually, you can see right now because the share price has dropped quite a fair bit, dividend yield is at 5.5%. But again, we look at, is it sustainable for them to continue to pay out such a high dividend? Because imagine if they cut the dividend by 50%, from 1.46 becomes 0.7, this dividend yield will also drop by half. So suddenly, you thought that you're getting a 5.5%. Next year, it drops to 2%. Then actually, it becomes overvalued. So this is also something that we have to look at. So if you look at the chart, I just throw in even more in-depth things. Okay, if you look at the chart of Intel, let's take a look. Very, very interestingly. You can see that Intel is actually, it has taken quite a huge dip. Okay, from almost $60 it has dropped all the way to $20 So some people will say, hey, Bowen, what dropped so much? Now is a good time to buy because it is cheap. If this is a good company that is making more and more money and the share price drops so much, it is an opportunity. But if the business is not doing well and the share price drops so much, remember, cheap can always become cheaper. So personally for me, I do love Intel as a company, but I need to see how they are able to evolve to potentially even fight back AMD and of course with Nvidia as well. So that is something that I need to understand a little bit more about this company before I will actually see whether this is undervalued or overvalued. I hope it helps you to make the decision for Serene.
I just see like it's only 1 year, like 2022. The rest of it is like good, right? So
correct, but very importantly is right now, because today, now is the time you are going to invest. So let's say, I'm not sure if you do have a daughter. Let's say you have a daughter lah, then your daughter, the boyfriend, right, every year make very, very good income lah. But right now, okay, he's unemployed. Will it be a concern? Or will you say, it's okay lah, last time he has been making a lot of money. You'll be like, hey, why this young guy 1 year, for the last 1 year has been unemployed? Because right now is where it's more important, this is the time when you're going to buy. So for me, very simple. If you already own it, then of course you have to see whether do you want to reduce the position or cut loss or want to continue to hold on to it. But if today I am totally new, I want to buy a company, I think there are a lot of other company out there that I can choose lah. So I don't necessarily have to go and find this company to invest. So depending on which position we are lah. Alright, and even if let's say today you already invested, should you hold on to the losses and wait for it to recover? I always tell the student, okay, don't always keep on holding to the same company because this is where you lose your money. Don't forget, if this amount of money you put into another company that is undervalued, and which one will go up faster? Actually, the better company will recover, will grow up faster. So end of the day, where can you make money? By putting the money into the better place. So don't have to necessarily make back your money from your same losses, but rather look at this same amount of money. Which area can potentially help me to grow even faster? Then you go and park it there because opportunity cost is also very costly. So Serene, do you have any other question for me before we pass on to the next person?
No, thank you.
Alright, Ken, thanks a lot, Serene, for coming up. And maybe let's choose one more. Let's choose one more person. I want to ask all of you, are you all learning something from the hot seat itself? If you are learning something, can you type yes? I need some assurance. I see you all like very serious, like not much response. Okay, cool. Let's take a look at one more company. Okay, let's have another. Oh, I love this company. Cheryl Chong. Do we have a Cheryl Chong over here? Okay. Calling for Cheryl Chong once. Calling for Cheryl Chong twice. Cheryl Chong, you need to on your camera first. Cheryl. Okay, I give you 3 more seconds. Okay, don't have. Then let's choose another one. Let me choose this. Okay, why I choose is because of the company. Okay, yeah, I think there's another person that chose the same company. Okay, John Lim. Let's have John Lim. I think there's actually 2 John Lim. The John Lim that choose Palantir. Can you on your camera first? Palantir. Mr. Palantir. Okay, anyone? I saw 2 John Lim over here. Okay, so I think it's the other John Lim. Also never on video. Y'all don't be so shy, okay? Okay, let me see one more Palantir one. I think there's another person that choose Palantir. Palantir, where's the Palantir? I think it's a lady just now that I saw. No more, disappeared. Okay, don't worry, let me choose one more person now. Or anybody, you want me to go through your company, can you help me to type in your company again? Type in your company again and then I will choose one more. But you must be willing to on your camera one, then you type. Okay, we have the first one, Fendi dot space AU. FENDIE. Yes, hello, I can see you. Hello, Fendi, are you able to unmute yourself? Hey, don't worry, very pretty already. Don't need to make the hair. You make the hair, I also want to make my hair. Yes, Fendi, can you hear me?
Yeah.
Okay, just to check, the company that you choose is Palantir, is it?
Yes.
Okay, I just want to ask you, why you choose this company?
Curious to know.
Curious? Sorry, I didn't catch that.
I'm curious to know.
Oh, did you invest already?
Yes.
Did you lose money from Palantir?
I actually buy sell put.
Oh, okay. At what price?
822.
822?
Yeah, 8.22.
Oh, okay. $8.22. So now it's dropped a little bit. I see. When did you enter? Just curious.
I think it's end of April.
End of April, so it's only very recently lah, very recently only lah.
I think already expired.
Okay, anyway, just to share with everyone why I choose this company is because you can see this company used to be a hot favorite during the COVID period. You can see from $8, $9, it went up to $45, and then now it's back to $7 over. Yeah, so I know a lot of people are very, very interested into Palantir, but Fendi, where do you get to know about this company? How do you get to know?
I joined some other group for learning the share. It's already quite some time, about 2 years.
Okay, and then they introduced to you about this company Palantir.
They're just sharing to like just do a swing trade only for
A
this.
swing trade lah. Okay,
Yeah.
okay, got it. So very, very, very different strategy. So just to also share with you guys, over here, right, we are focusing a lot more on investing. That means we find good company, you want to hold it over the long period of time, you'll make money without working so hard lah. But swing trade is more of like trading. So trading is very active. So number one, you need to have the time, you need to have more skill set in order for you to do the swing trade. So there's a difference because swing trade, right? Actually, even if this is a lousy company, can you do swing trade? The answer is yes. But for us, right, our criteria is always go for good company. So why I say that is because if you look at the chart, the company itself based on our eFriend, actually you can see earnings per share, this company is losing money lah. Okay, every single year. Free cash flow is turning positive. Okay, at least this is a slightly good sign. Okay, return on equity, everything is still negative lah. So interest coverage, lose money, then don't have to say anything. Profit margin also definitely negative. So these are what we call disruptor company. That means potentially now they are losing money, but if they are able to become profitable, the share price will jump significantly. Okay, but like I said, this kind of company, right, do you think you need more knowledge or less knowledge to invest in a company like that?
No.
You need a lot more. It's not just normal more. You need a lot more. So number one, either you personally, you understand, you get to read how this company work, where they make money, potentially how long later they will start to make profit. If you understand all this, then I think this is definitely something that you can start investing into. But I think a lot of people, they buy this because they watch YouTube. What else? Mainly. I know a lot of YouTubers are talking about this company when it was going up. But right now, nobody talk about it anymore because why? All the subscribers all lose money like crazy. Right. So again, even if I look at the chart itself, you can see that it is actually still going down trend. It is still going down. So even for me, if you ask me, based on swing trade or anything, is it a good time for us to even go into this Palantir? I would say that now is definitely still not a good time lah. Could it go down further? Potentially, yes. Alright. So you can see, let's say we go for a very, very basic company lah, that everybody know, Apple. You can already see that, right? Previously, when the market go down, okay, Apple has also dropped quite significantly. You can see that Apple dropped from the top to the bottom about 30%. Okay, but the thing about good company is that whenever market starts to recover, everybody will put their money into the solid company first. So which also means that if you invest into all these like Apple, Google, Microsoft, you can see that you are already making at least 30%. And this is just based on share price. So of course, if you are doing options, if you are doing other strategy, can your return be even higher than 30%? The answer is yes lah. So again, we look at opportunity cost. Now your money is stuck in Palantir. Will it go up? Maybe. Will it go down further? Also possible. And how long later before it will fly all the way back to $20, $30 actually is a question mark. Okay, it is a question mark. So I think this is also something for us to consider. What is the difference between a good and strong company? Actually, it is the same. It is just the use of English is a little bit different. Okay. Yeah, so end of the day, look for fundamental first. Especially if you are new to investing, all the more you need to start with something that is more stable, something that has got a track record. If you become more advanced, become more experienced, you want to go for company that are losing money but has got huge potential, you can. Okay, but I think like what Glenn mentioned about portfolio, how much portfolio do you want to allocate to this kind of company? Maybe 5%, 10% maximum. Okay, I've seen people 100% of their company into company like Palantir, company like Lemonade, all these very, very high potential, but then losing money one. Then all their money is stuck. So Fendi, how long have you been investing already?
2 years.
2 years lah. How has everything been for you? I think last 2 years quite challenging.
No good.
No good lah. Okay. Then how do you plan to recover?
Study hard
Okay, start.
and willing to cut loss.
Yeah lah. So what is your biggest loss position? If you don't mind sharing, which company?
Baba lor.
Alibaba lah. Okay. So right now, if I ask you lah, Alibaba, what will you do? Will you continue to keep it, cut loss, or buy more? three solution lah. Okay, continue to hold it, cut away the losses and buy a good company. Or number 3, go and buy more lah because now it's good price mah.
I have already cut loss some and keep some, so we'll keep it for long term.
Okay, keep it for long term lah.
The position is not that big lah.
Okay. So let's take a look at Baba. I think quite a number of the students also choose Alibaba as well. Okay, let's take a look at Alibaba. Okay, let's take a look at Alibaba. Where is Alibaba? Okay, let's take a look at the fact sheet. So we can actually see that same thing. Alibaba used to be a very, very solid company with high growth. You can see from 0.1 to 3 to 4 to 5 to 7. Okay, but of course for the last 1 to 2 years post-COVID, it has taken a little bit of a hit lah. Okay, so now it came down slightly. Let's look at the last four quarter. You can actually see that if I combine these four together, it's somewhere around 1, 2, 3.6, 4.2. Okay, about 4.2 lah. So also slightly lower than before. So earnings has been affected. The good thing is cash flow, everything is still positive. So they definitely still got the bullet lah. Okay, return on equity also now is below our requirement, but interest coverage, okay, is still past. Net profit margin is under the field already. So if you ask me, this company in terms of the scoring is probably somewhere around 6 to 7, depending on the economic mode as well. Now I'm doing very, very fast shortcut lah. Okay, of course, you'll go into the spreadsheet, you will also have the better calculation to know whether this is a good company or whether this is company that below 7 you probably want to avoid. Right. But if I look at this company based on valuation as well, valuation, I think just now Glenn talked to you about PE ratio, okay, and also PEG. Where can we actually get the growth rate of this company? Actually, you can see right at the bottom, you can see the earnings per share. You can see right at the bottom, earnings per share rate of change. So you can see for Alibaba, the past 5 years average is about 7.8%. Past 3 years is negative, past 1 year is negative as well. So to be safe, if you ask me what is their future growth, optimistically I use 7.8 but actually right now it's going down. I don't know how much further it will go down. Alright, let's use 7.8. And if you look at the PE ratio of this company, let's say I over here price to earning. Okay, I just put PE ratio over here. Update spreadsheet. Okay, let's take a look at the PE ratio. Right now it's actually at 30. So if I calculate the PEG, okay, then of course you can see that this is definitely overvalued at the current moment. You can go to the spreadsheet, put in the calculator, it will be a lot obvious but based on this, very obvious to me, it is overvalued. So again, doesn't mean that it is cheap, means you want to go in because why? You can see that it is still relatively uncertain. Okay, you can see that it is still relatively uncertain, even though it has dropped a lot. Okay, but like I said, if you put your money somewhere else, can you make your money faster? Potentially, yes. So this is also why we always tell our students, and sometimes we even force them to go and cut loss and go and buy other company, because I know how difficult it is to sell it away. Okay, so for what is the best PE ratio to determine, again, we use the spreadsheet. Okay, use the spreadsheet that we have given you inside the eFriend Ask. One of them is under the growth. Okay, the PE divided by the growth. So you use the formula, look for the entry price. We want to buy below the entry price. Alright, so I hope it has been a good learning. Fendi, do you learn something from this session?
Yes.
Okay, if you say no, then alright, thanks. Can everybody type in CCC for Fendi? CCC stands for clap, clap, clap lah. Okay, so I hope you all have been learning something over the last 30 minutes, right? So I hope by now, okay, you are supposed to be a little bit more awake, not more sleepy. Okay, so to make sure that everybody are even more awake, right? Can I get everybody okay, to go and to on our camera so at least I can see all of you. Okay, as long as you have your clothes on, don't worry, I will not judge you whether you got your makeup on or not. Got wear clothes more important. Okay, fantastic, fantastic. And you realize that when you're on your camera, you also a bit more stressed. Then you will pay more attention. When you pay more attention, you get to learn even better as well. Thanks. I see a lot of people on your camera. Then at least y'all smile, y'all laugh. I know that my joke is funny. Sometimes I say a joke, y'all never laugh, then I also don't know whether my joke is effective or not. Okay, fantastic. Wow, I can see more and more people laughing already. Maybe you're laughing at my hairstyle, is it? Okay, anyway, let's get started. Okay, as mentioned earlier on, I think one of the biggest thing that you guys are looking for is where can I start to look for all these companies. I think right now is we are getting a lot of company based on what we understand, based on what we are familiar with. But is there any other good company out there that a little bit more unknown, but yet we can actually spot for all this undervalued gem? So this is where I want to share with you the next module. Okay, so very, very powerful and impactful. Alright, so make sure that you can actually see my PowerPoint. Yes, fantastic. Okay, so welcome back to Day 2, second half. So this is what I'm going to share with you. Where can we actually start to look for good stock? So I have 3 solutions for all of you. Number 1 is around you. Okay, and of course number 2 is to look at this thing called stock sector. And the last but not least is to look and follow the guru. That means the guru by what? You just simply follow. Okay, but of course having said that, we don't follow blindly because why? The guru, right? Maybe the guru invest and say that I'm willing to hold this for 50 years. Okay, but I don't think you want to invest and wait for 50 years to see your money grow. Okay, so sometimes you follow, you buy, you wait 1 year, 2 years, never make money, you sell away. And then after that, the shares actually start to go up. So you need to understand your time horizon and the guru time horizon as well. Let's start off with the first one. Okay, so maybe right now, before I even show you, can you just look around you and your, maybe around your room or on your table? What are some of the things around you that are listed? Can you help me to put inside the chat? You'll be surprised, there are a lot of companies that are listed around you. Okay, great. Microsoft. Okay, if you are using your laptop, do you have your Microsoft Office, Microsoft Excel? Okay, and of course, Apple. Wow, we know where are all the Apple users. Colgate, yes. Okay, and then we have P&G. Wow, your Head and Shoulder, your shampoo, all these are all listed company. Starbucks. Wow, Sally drinking Starbucks. Okay, makes me want to drink. Okay, HP, and we have what else? Samsung, 3M. Wow, fantastic. Visa, Acer, Google. Okay, Unilever. Okay, by the way, right, while your classmates are putting in all these company, okay, I want all of you, right, to also open up your spreadsheet. Okay, all these companies that you have not filled in before, right, I want you to start putting them in already, because you will also start to realize a lot of the things that you spend money on, you realize that most of the time these companies are doing pretty well. Because why? How does the company make money? It's because you are the consumer. Like, why do you buy them? You buy them because they are good. And is it you alone think that they are good? Actually, a lot of people also think that they are good. A lot of people are using their services. So you also realize that actually one of the best way to look for stock company, right, is to look at your credit card, look at your